In the context of stock trading, these technical indicators can also be considered features that are used in data analysis to better understand stock performance. One of the most common methods for predicting market movements involves the use of technical indicators, which are mathematical calculations based on the price, volume, or open interest of a stock. In the world of financial markets, making informed decisions about when to buy or sell stocks is a complex task. So let's start coding.
This snippet starts off by importing a variety of libraries that are essential for data analysis and visualization. OS is included for operating system interactions, like file path manipulations. Pandas is a powerful library for data manipulation and analysis. It allows us to work with data frames efficiently. Matplotlib.pyplot and Seaborn are both used for plotting. Seaborn builds on Matplotlib and makes it easier to create more attractive and informative statistical graphics. Warnings is imported to manage warning messages from Python. Here, it's set to ignore any warnings, which might help keep the output clean for our analysis. Plotting seems to be a custom module that likely contains specific plotting functions tailored for this project. Statsmodels.api is imported for statistical modeling, which will help in testing hypotheses on the stock data. Importlib.reload is a handy tool that allows you to reload a modified module without restarting the Python session. NumPy is included for numerical operations, which are often necessary when working with large datasets. Operator could provide various efficient functions that can help with comparisons or logical operations on data. Finally, the plt.rcprams figure.dpi line sets the default resolution for plots to 227 dots per inch, which is optimized for the developer's screen. This helps ensure that the visualizations are sharp and clear when displayed. Overall, this setup prepares the environment for performing exploratory data analysis effectively. This snippet starts by listing all the files in the data stocks directory. It creates an empty dictionary called stocks to hold the data from CSV files. The loop goes through each file name in the files list. It checks if the file has a .csv extension by splitting the file name and looking at the second part. If it's a CSV file, it extracts the name, the part before the dot, and reads the file into a pandas data frame using pdread_csv, setting the date column as the index. After loading the data, it converts the index, which represents dates, to a datetime format using pd_datetime. This ensures that any date manipulations or time series operations can be done efficiently later on. The resulting data frame is stored in the stocks dictionary with the stock name as the key. So basically, this code is setting everything up to manage the stock data in an organized way, making it easier to analyze later. The code snippet is designed to print a list of stock symbols in uppercase letters. It begins by printing the string list of stocks, followed by a space, which sets the context for the output. The for loop iterates over the keys of the stocks dictionary, where each key represents a stock symbol. During each iteration, the current stock symbol is converted to uppercase using the upper method and printed, again followed by a space. The use of and equals in the print function ensures that the output remains on the same line, rather than moving to a new line after each symbol. The output displays a series of stock symbols, such as CSCO, ORCL, eBay, and others, all in uppercase. This format is typical for stock symbols, which are often represented in uppercase letters. The list includes well-known companies from various sectors, indicating a diverse selection of stocks. The output effectively communicates the available stock symbols for analysis in the context of exploratory data analysis for stock forecasting, allowing users to quickly identify the stocks being considered in the project. Overall, the code efficiently formats and presents the stock symbols, making it easy for readers to understand the scope of the analysis. The code snippet stocks tsla.head retrieves the first 5 rows of data from a data frame named stocks, specifically for the Tesla stock, denoted by the key TSLA. This data frame likely contains historical stock data, including various financial metrics and indicators that are essential for exploratory data analysis in stock forecasting. The output displays a structured table with multiple columns, each representing different attributes of the stock data. The first section includes standard stock market data such as open, high, low, close, adjusted close, and volume, which are fundamental for understanding the stock's performance over time. For instance, the open column shows the price at which Tesla stock opened on a given date, while close indicates the price at which it closed. The volume column reflects the number of shares traded, providing insight into market activity. Following the basic stock data, the output includes calculated metrics such as return, change, volatility, moving averages, MA7 and MA21, and momentum. These metrics are crucial for analyzing trends and making predictions. For example, return indicates the percentage change in stock price, while volatility measures the degree of variation in trading prices. Moving averages help smooth out price data to identify trends over specific periods, and momentum indicates the strength of price movements. The final part of the output presents technical indicators like RSI, Relative Strength Index, MACD, Moving Average Convergence Divergence, and Bollinger Bands, up_band and low_band. These indicators are widely used in technical analysis to assess market conditions and potential buy or sell signals. The RSI, for instance, helps identify overbought or oversold conditions, while MACD can indicate potential trend reversals. Overall, this code and its output provide a comprehensive snapshot of Tesla's stock performance, combining raw price data with calculated metrics and technical indicators, which are essential for conducting exploratory data analysis and making informed forecasting decisions. The code snippet calculates the correlation of various stock metrics with the return of Tesla (TSLA) stock. It specifically accesses the correlation matrix for the Tesla stock data, focusing on how different features relate to the return. The correlation values indicate the strength and direction of the linear relationship between return and other metrics such as change, RSI, close, and adjective close. The output shows the correlation coefficients, with return having a perfect correlation of 1.000000 with itself, which is expected. The change metric has a correlation of 0.643410, suggesting a moderate positive relationship with the return. This indicates that as the change in stock price increases, the return tends to increase as well, though not perfectly. The RSI Relative Strength Index shows a lower correlation of 0.282943, indicating a weaker relationship with the return. This suggests that the RSI, which measures the speed and change of price movements, does not strongly predict the returns of Tesla stock. The close and adjective close prices have a correlation of 0.029047, indicating almost no relationship with the return, which implies that the closing prices are not significant predictors of the stock's return in this context. Overall, this analysis helps in understanding which metrics are more closely related to the stock's return, providing insights that can be useful for forecasting and making investment decisions. The higher the correlation, the more reliable the metric may be for predicting future returns. The code snippet sets up a visualization to analyze the correlation between various features related to Tesla stock data. By adjusting the figure's DPI dots per inch to 227, it ensures that the output image is of high quality. The plt.figure, figsize sat smiley 1814 command specifies the size of the figure, making it large enough to accommodate detailed information without cluttering. The sns.heatmap function from the Seaborn library is used to create a heatmap that visualizes the correlation matrix of Tesla's features, which is derived from the stock's tsla.core method. This method computes the pairwise correlation of columns in the data frame, providing insights into how different features relate to one another. The heatmap displays correlation coefficients ranging from -1 to 1, where values close to 1 indicate a strong positive correlation, values close to -1 indicate a strong negative correlation, and values around 0 suggest no correlation. The annotations on the heatmap, formatted to 2 decimal places, allow for easy interpretation of these coefficients. The plt.lm17.0 command reverses the y-axis to display the features in a more intuitive order, while the title correlation between Tesla features provides context for the viewer. Interpreting the output, several key correlations stand out. For instance, the correlation between volatility and open is notably high at 0.80, suggesting that as volatility increases, the opening price tends to rise as well. Similarly, MA7 and MA21 moving averages show a perfect correlation of 1.00, indicating they move together consistently. The correlation between return and change is also significant at 0.64, implying that changes in stock price are closely related to the returns. Conversely, features like RSI Relative Strength Index and MACD Moving Average Convergence Divergence show varying degrees of correlation with other features, which can be useful for traders and analysts in understanding market behavior. Overall, this heat map serves as a powerful tool for exploratory data analysis, allowing stakeholders to identify relationships between different stock features, which can inform trading strategies and forecasting models. The code snippet utilizes the Bollinger_Bands function from a plotting library to visualize the Bollinger Bands for Tesla's stock prices over the year 2018. Bollinger Bands are a technical analysis tool that consists of a middle band, the moving average, and two outer bands that are standard deviations away from this average. In this case, the moving average is calculated over a 21-day period, which smooths out price fluctuations and provides a clearer view of the stock's trend. The output image displays three key components: the stock price, the moving average, and the Bollinger Bands. The blue line represents Tesla's stock price, showing its fluctuations throughout the year. The purple line indicates the 21-day moving average, which helps to identify the overall trend by averaging the stock prices over the specified period. The shaded area around the moving average represents the Bollinger Bands, which are set at two standard deviations above and below the moving average. This area provides insight into the volatility of the stock. When the price approaches the upper band, it may indicate that the stock is overbought, while approaching the lower band may suggest it is oversold. In interpreting the output, one can observe periods of high volatility where the price moves significantly away from the moving average, as well as periods of relative stability where the price remains within the bands. The interaction between the price and the bands can guide traders in making decisions about buying or selling the stock based on its historical performance and volatility. Overall, this visualization serves as a powerful tool for analyzing Tesla's stock behavior in 2018, helping to inform investment strategies. The code snippet utilizes the plotting.rsi function to visualize the relative strength index, RSI, for Tesla's stock data over the year 2018. The RSI is a momentum oscillator that measures the speed and change of price movements, typically used to identify overbought or oversold conditions in a market. The input to the function is a subset of the stock data for Tesla, specifically filtered to include only the data from 2018. The output is a line graph displaying the RSI values over the specified time period. The y-axis represents the RSI percentage, ranging from 0 to 100, while the x-axis shows the timeline from January to December 2018. Two horizontal lines are drawn at the 30% and 70% levels, which are commonly used thresholds in RSI analysis. A value above 70 indicates that the stock may be overbought, suggesting a potential price correction, while a value below 30 indicates that it may be oversold, signaling a possible price increase. In the graph, the RSI fluctuates throughout the year, with several peaks and troughs. Notably, the RSI crosses the 70% line at certain points, indicating periods where Tesla stock was considered overbought. Conversely, there are instances where the RSI dips below 30%, suggesting oversold conditions. These insights can help traders make informed decisions about buying or selling the stock based on its momentum and potential price reversals. Overall, the visualization effectively communicates the stock's performance and market sentiment throughout 2018. The code snippet utilizes the MACD, Moving Average Convergence Divergence, indicator to analyze the stock performance of Tesla, TSLA, for the year 2018. By calling plotting.mact stocks TSLA.loc 2018:2018, it extracts the Tesla stock data specifically for that year and generates a visual representation of the MACD indicator. The output image displays two lines, the MACD line, represented in purple, and the signal line, shown in orange. The MACD line is derived from the difference between two exponential moving averages, EMAs, of the stock price, typically the 12-day and 26-day EMAs. This line indicates the momentum of the stock, with values above 0 suggesting bullish momentum and values below 0 indicating bearish momentum. The signal line, which is a 9-day EMA of the MACD line, serves as a trigger for buy or sell signals. When the MACD line crosses above the signal line, it may suggest a buying opportunity, while a cross below could indicate a selling opportunity. In the plotted output, the horizontal blue line at 0 serves as a baseline for interpreting the MACD values. Throughout 2018, the MACD line fluctuates above and below this baseline, indicating periods of both bullish and bearish momentum. The interactions between the MACD and signal lines provide insights into potential trading signals, with several crossovers occurring during the year. Observing these trends can help investors make informed decisions based on the stock's momentum and potential future movements. The code snippet utilizes the plotting.volume function to visualize the trading volume of Tesla stock, TSLA, for the year 2018. By accessing the stock's data frame, it specifically filters the data to include only the entries from January 1, 2018 to December 31, 2018. This time frame allows for a focused analysis of the stock's trading activity over the entire year. The output is a line graph that represents the trading volume on the y-axis, measured in millions, against time on the x-axis, which spans the months of 2018. The graph illustrates fluctuations in trading volume, with peaks and troughs indicating periods of higher and lower trading activity. For instance, there are noticeable spikes in volume during certain months, suggesting increased investor interest or significant market events affecting Tesla stock. Conversely, the graph also shows periods of relatively stable or declining volume, which may indicate less trading activity or investor caution. Overall, this visualization serves as a crucial tool in exploratory data analysis, helping to identify trends and patterns in trading volume that could inform future stock forecasting and investment decisions. By examining these patterns, analysts can gain insights into market behavior and potential influences on stock performance throughout the year. The code snippet generates a visual representation of Tesla's stock returns, segmented by month. It begins by setting up a figure with a specified size and applying a style that enhances the visual appeal of the plot. A loop iterates through each month of the year, extracting the return data for Tesla's stock corresponding to that month. The SNS.distPlot function is used to create a smooth density plot for the returns, with each month represented by a different color. This allows for a comparative analysis of the distribution of returns across the months. The legend is configured to display the month numbers, making it easy to identify which color corresponds to which month. A vertical dashed line is drawn at the mean return of Tesla stock, providing a reference point for evaluating the distributions. The x-ticks are adjusted to center around this mean return, enhancing clarity. The title of the plot succinctly describes the content, indicating that it visualizes Tesla's returns by month. The output image illustrates the distribution of Tesla's returns for each month, with distinct curves representing each month's data. The peaks of these curves indicate the most common return values for each month, while the spread of the curves reflects the volatility of returns. The vertical line at the mean return serves as a benchmark, allowing viewers to see how each month's distribution compares to the overall average. This visualization is crucial for understanding seasonal trends in Tesla's stock performance, aiding in exploratory data analysis for stock forecasting. The code snippet utilizes a function to compare the returns of various stocks over a specified period, focusing on daily returns. By setting the value parameter to return and the buy parameter to day, the function generates a visual representation of how each stock's return fluctuates day by day. The scatter parameter is set to false, indicating that the output will be a line plot rather than a scatter plot, which is more suitable for observing trends over time. The output image displays multiple lines, each representing a different stock's daily return. The x-axis is labeled as period, which likely corresponds to the number of days, while the y-axis shows the return, indicating the percentage change in stock price. Each stock is represented by a distinct color, making it easier to differentiate between them. A bold black line labeled All aggregates the returns of all stocks, providing a clear visual cue for overall performance trends. In interpreting the output, one can observe the volatility of stock returns over the specified period. The lines exhibit significant fluctuations, indicating that stock returns can vary widely from day to day. The black line representing the aggregate return helps to highlight general trends, such as periods of growth or decline across the stocks. This visualization is particularly useful for investors and analysts, as it allows them to quickly assess the performance of individual stocks relative to the overall market behavior during the observed timeframe. The code snippet utilizes the plotting.compare_stocks function to visualize the closing prices of various stocks over a monthly timeframe. By specifying value equals close, the focus is on the closing prices, while by equals month indicates that the data is aggregated by month. The parameter scatter equals false suggests that the output will be a line plot rather than a scatter plot, allowing for a clearer comparison of trends over time. The resulting plot displays multiple lines, each representing a different stock's closing price over the specified period. The x-axis is labeled as period, which likely corresponds to the months, while the y-axis represents the normalized closing prices. Each line is color-coded and corresponds to a specific stock, as indicated in the legend. The bold black line labeled All likely represents an average or aggregate of all the stocks included in the analysis, providing a benchmark for comparison. Interpreting the output reveals trends and patterns in stock performance. For instance, some stocks may show consistent growth, while others might exhibit volatility or decline. The visualization allows for easy identification of which stocks are performing well relative to others over the same period. Observing the interactions between the lines can also highlight correlations or divergences in stock performance, which can be crucial for making informed investment decisions. Overall, this plot serves as a powerful tool for analyzing stock trends and understanding market behavior over time. The code snippet is designed to visualize the returns of various stocks over a specified period in September and October 2018. It initializes an empty dictionary to store the return data for each stock, sets the figure's resolution and size, and applies a specific style for the plot. The loop iterates through a collection of stocks, extracting their return data for the defined date range and plotting each stock's return on the same graph. The legend is configured to display the stock names, and the plot includes a title, labeled axis, and a horizontal line at 0 to indicate the baseline return. The output is a line graph that illustrates the daily returns of multiple stocks over the selected time frame. Each line represents a different stock, with distinct colors for easy differentiation. The x-axis shows the dates, while the y-axis indicates the return values. The dashed horizontal line at 0 serves as a reference point, allowing viewers to quickly assess whether the returns are positive or negative on any given day. The graph reveals the volatility of stock returns during this period, with many stocks fluctuating around the 0 line, indicating periods of both gains and losses. This visualization aids in understanding the performance trends of the stocks and their correlations during the specified time frame, which is crucial for exploratory data analysis in stock forecasting. The code snippet creates a heat map to visualize the correlation between the returns of various Nasdaq stocks. It begins by setting up a figure with a specified size of 18 by 12 inches, which provides ample space for the heat map to be displayed clearly. The sns.heatmap function from the Seaborn library is then used to generate the heat map, taking as input the correlation matrix derived from the stocks_return_correlation data. The not equals true parameter ensures that the correlation coefficients are displayed directly on the heat map, allowing for easy interpretation of the relationships between the stocks. The plt.lm17.0 function call adjusts the y-axis limits, effectively flipping the y-axis so that the first stock appears at the top of the heat map. This is a stylistic choice that can enhance readability. The title of the heat map, Correlation between Nasdaq Stocks, is set with a font size of 15, making it prominent and easy to read. Finally, plt.show is called to render the heat map. The output is a colorful matrix where each cell represents the correlation coefficient between two stocks, ranging from -1 to 1. A value of 1 indicates a perfect positive correlation, meaning that the stocks move in the same direction, while a value of -1 indicates a perfect negative correlation, where the stocks move in opposite directions. Values close to 0 suggest little to no correlation. The color gradient enhances this interpretation, with darker shades indicating stronger correlations. For instance, stocks like AMZN and MSFT show a high positive correlation of 0.82, suggesting that they tend to move together. Conversely, the correlation between EA and NVDA is notably low at 0.009, indicating almost no relationship in their movements. This visualization is crucial for investors and analysts as it helps identify which stocks may behave similarly or differently, aiding in portfolio diversification and risk management strategies. This piece of code is focused on calculating the correlation between the returns of different stocks over a specified time range, from 2018 to 2019. It starts by initializing an empty dictionary called stocks_core to store the results. Then, it loops through each stock in the stocks collection, where A represents the current stock being analyzed. For each stock, it retrieves its return values for the years 2018 and 2019, storing them in stock 1. Next, another empty dictionary C is created to hold the correlation values of this stock with all other stocks. Within the inner loop, it retrieves the return values for another stock J, and if I and J are not referring to the same stock, to avoid calculating the correlation of the stock with itself, it calculates the correlation coefficient between stock 1 and stock 2. This correlation coefficient is stored in the dictionary C with the stock J as the key. After processing all stocks against the current stock I, the code finds the stock with the highest correlation value using max, which checks the items in the dictionary C and uses operator.itemGetter1 to focus on the correlation values. The maximum correlation and its corresponding stock are then stored in the stocks_core dictionary with a key format of stock1, stock2, and the correlation value as a list containing just this value. In summary, this block of code systematically determines the stock that has the highest correlation with each stock for the specified time frame, helping to identify how closely these stocks move together during that period. The code snippet processes a correlation matrix of stock returns, specifically focusing on the relationships between different stocks. It first converts the correlation data into a pandas data frame, transposes it to switch rows and columns, and then sorts the values in descending order based on the first column. Finally, it retrieves the top 10 pairs of stocks with the highest correlation coefficients. The output displays the 10 highest correlation values between pairs of stocks. Each row represents a unique pair, such as GUG AMZN and AMZN GUG, both showing a correlation of approximately 0.7947. This indicates a strong positive relationship between the stock prices of Google and Amazon, suggesting that when one stock moves, the other tends to move in the same direction. Other notable pairs include MSFT GUG and Cisco MSFT, with correlation values of 0.7837 and 0.7356, respectively, indicating similarly strong relationships. The correlation coefficients range from about 0.6360 to 0.7947, with higher values indicating stronger relationships. This analysis is crucial for investors and analysts as it helps identify which stocks move together, allowing for more informed decisions regarding portfolio diversification and risk management. Understanding these correlations can also provide insights into market trends and the potential impact of economic events on related stocks. The code snippet creates a visual representation of Tesla stock data, focusing on the closing prices and the high-low range over a specified period in 2018. It begins by setting the figure size for the plot, ensuring that the output is wide enough to display the data clearly. The data for Tesla stock is filtered to include only the dates from July 2018 to the end of the year. The code calculates the exponential moving averages (EMAs) for the high and low prices over a 7-day period, which smooths out short-term fluctuations and highlights longer-term trends. The fill_between function is used to create a shaded area between the high and low EMAs, visually representing the range of stock prices. This area is colored with a light purple hue, providing a clear indication of the volatility in Tesla stock during this time frame. The closing prices are plotted as a solid line in a darker shade of purple, allowing for easy comparison against the high-low range. Additionally, the 7-day EMA of the closing prices is plotted as a separate line in a brighter pink color, further emphasizing the trend in the stock's performance. The legend identifies these elements, making the graph easier to interpret. The title of the plot succinctly describes the content, and the overall layout is designed to facilitate understanding of Tesla's stock behavior over the specified period. The output image effectively conveys the relationship between the closing prices and the high-low range, illustrating periods of volatility and stability in Tesla's stock performance throughout the latter half of 2018. The code snippet defines a lambda function, Z, which standardizes the returns of Tesla stock by subtracting the mean and dividing by the standard deviation of the returns. This transformation results in a dataset where the mean is 0 and the standard deviation is 1, allowing for a normalized comparison of the returns. The function is then applied to the return column of the stock's TSLA data frame, which presumably contains the historical return values for Tesla stock. The histogram generated by plt.hist visualizes the distribution of these standardized returns. With 30 bins, the histogram provides a detailed view of how the returns are distributed around the mean. The x-axis represents the standardized return values, while the y-axis indicates the frequency of occurrences for each bin. The title, Tesla Return Distribution, clearly labels the plot, making it easy to understand the context. The output histogram reveals a bell-shaped distribution, suggesting that the standardized returns are approximately normally distributed. The peak of the histogram indicates that most of the returns are clustered around the mean, with fewer occurrences of extreme returns on either side. This visualization is crucial for understanding the volatility and risk associated with Tesla's stock returns, as it highlights the likelihood of various return levels. Overall, the code and its output provide valuable insights into the behavior of Tesla's stock returns, essential for any exploratory data analysis in stock forecasting. The code snippet creates a quantile QQ plot to assess the normality of the returns of Tesla stock, as indicated by the stock's TSLA return data. The plt.figure figsize set smiley 16:6 function sets the size of the figure to a width of 16 inches and a height of 6 inches, providing a clear and spacious view of the plot. The plt.rcparams figure.dpi equals 227 line adjusts the resolution of the figure, enhancing the clarity of the output. The smqplot function generates the QQ plot, which compares the quantiles of the sample data, Tesla returns, against the quantiles of a standard normal distribution. The line equals S parameter adds a reference line that represents where the points would lie if the data were perfectly normally distributed, while scale equals 1 ensures that the scale of the plot is appropriate for the data. The output of this code is a QQ plot that visually represents the relationship between the sample quantiles of Tesla's returns and the theoretical quantiles of a normal distribution. The blue dots on the plot correspond to the actual sample quantiles, while the red line indicates the expected quantiles if the data were normally distributed. If the blue points closely follow the red line, it suggests that the data is normally distributed. In this case, the plot shows that the blue points deviate from the red line, particularly in the tails, indicating that the returns of Tesla stock do not follow a normal distribution. This deviation suggests the presence of skewness or kurtosis in the data, which is important for stock forecasting as it may affect the assumptions underlying various statistical models. Overall, the QQ plot serves as a diagnostic tool to evaluate the normality of the stock returns, which is a critical aspect of exploratory data analysis in financial contexts.